everybody. I am on live tonight. I was going to go live on my business page. However, we're having technical difficulties. So we're going to do it here and then I'll share it there. I am on live with Jason Frazier. He is with Mason McDuffie Mortgage, and he is their Chief Information Officer, and he's better known as the Real Estate CIO. Hey, Jason, how are you?
Good, Shannon. How are you?
I'm good. So I wanted to have you on here to talk a little bit about the FHA mortgage insurance premium that, came out on January 9th. I got an email that said this, and I'm just going to read it real quick. FHA has just issued a letter stating that they will be reducing their monthly mortgage insurance premium for all loans closing on or after 1/27/17. So, here in a couple of days.
Yep.
And then it was just as a quick reminder, the monthly mortgage insurance premium on all FHA loans is calculated as a percentage of the loan. Currently, that percentage is 0.85, and then it was going to drop to 0.60. And then on the day of the inauguration, the day Trump took over the office, they rolled that back. And then we saw this huge headline from Time, of all the most reputable sources, right? You would think that would be Time, that said how Donald Trump just raised mortgage bills. And I know you took some issue with that. We're not going to get into politics. This is not about politics. This is just about reporting facts and not giving soundbite headlines. So, Jason, can you address, how Donald Trump just raised mortgages? Did that happen?
No. So that was actually, so what I hate the most is because right now we're in a gotcha moment with media right now, as everyone wants headlines, everyone what they call clickbait, right? Because they want to get traffic to their sites. So so it was a blatantly false post, and it was by Time, Time Magazine, their Facebook page and their website, which to me was the most shocking part of it, because generally you think Time, they don't slant one way or another. At least I never thought they did. But it was just a blatant, and their headline was, and I took screenshots just because they changed it later, but they said, you're going to pay more in 2016 or 2017 than what people paid in 2016, which is just completely false. What the administration did, and again, it's not a political piece. It's just getting the facts out there, and you can make your own decision whether you're for or against it, after that. But what they did was they suspended the cut that was actually going to happen on the 27th. So that means if your loan closed or was funded, or the disbursement date was on or after the 27th of 2017, then you would get that quarter basis points cut, which on an average would be $500 for the year, which equates to like $41.66. So you round that up to $42. However, that was just an average. And if you look at the median house price in 2016, I believe it was like $228,000, which would then equate to somewhere in the neighborhood of $30-some. So you're even taking a lesser, dollar amount per month. So yes, any savings is great, but it's good to get the facts out there that's exactly the cut that they suspended. Now they didn't say it's not happening. They just suspended so they could look at it. And it was all due to looking at the insurance fund to see whether that was actually going to make financial sense to do that. Now, right or wrong, I don't know. But at the same time, it's just something that they're looking at. It had nothing to do with raising mortgage rates on anybody.
So it's interesting. There's been a little bit of debate. Like, I've been talking to some people about it, and some people were counting on that, right? That they went and they got some loans counting on that. I personally, and this is just my personal opinion, I find it very responsible to pull that back and to evaluate it, because here in Richmond, and I'm sure this is many places across the country, we have a lack of inventory, and it's a seller's market, and we have an influx of buyers. And when they were rolling out that reduction, that would bring more buyers in there. Well, if we don't get an increase in listings and we have more buyers fighting over the same small amount of listings, that's just going to increase prices. And while that's great for sellers in the short term, the long run, it's bidding up prices faster than what it should be. And I personally think that I was starting to see a little bit of, are we going to be getting in trouble like we did a while ago with The Big Short? And then if people didn't see The Big Short, I really highly suggest you watch it once and then you watch it twice to understand it. So I personally think it's a responsible thing because, like you said, they're not saying we're not going to do it. They're saying we're going to evaluate it. Now, why do you think it's important that they evaluate that? Because isn't this about being bailed out, right? That's what had to happen back in 2008, 9, 10. Like, we had to bail out the banks, the taxpayers. Is that correct?
Yeah, so they have a certain threshold that they have to hold, that FHA has to hold, right? That was mandated after the meltdown. And so I believe, and again, you'd have to check my numbers, but I want to say it's 17% above that threshold. Now, some people think it's solvent, but at the same time, you've really got to look to see if we have another meltdown, whether people think we're in a bubble now. And I think in some markets, you might have somewhat of a bubble because, like you said, if you have more buyers in a market than there's inventory, then that's inflating prices that where the house really isn't worth that much, right? So if you're going in, and now you have to couple that with, the increase in down payment assistance programs and first-time home buyer programs. All of them are great, and it's great to have those. But at the same time, if someone's going in and getting that house, and then people are thinking in long term of 30 years, but in actuality, people are only, I believe, before the meltdown, people were only staying in their homes for an average of 6 years. Now I think it's around 8 or 9. So you need to throw that 30-year number out the window. But when it comes down to it, is if that increase, right, or that decrease in mortgage insurance premiums, right, and it would definitely bring savings to those borrowers. But if those borrowers are really depending on that 30, or if you take it down to $200,000, right, $200,000 to which is around $29 or $28 a month to $42 a month, if you go by the average that the media is talking about. If that is really going to make or break you owning a house, then you might not be financially sound enough to own a home, because it is a long-term commitment. And what happens is those people in the beginning that got those loans, and obviously a lot of it had to do with teaser rates and things of that nature. So yes, that was a problem. But if you start getting into the point to where you're in a seller's market and your house sells for X amount, and then you want to refi or sell within 3 years, depending on where the market is. If it was it was basically a false increase. Let's say it was a $300,000 house, but because it's a bidding war, it goes to $350. Doesn't mean that house is worth $350. It's just what you had to pay for it, right? So again, you could be automatically underwater. It's almost like when you drive a new car off the lot and it depreciates right as soon as you get into it and drive out. So it's just something that they need to look at. It's something that, they may continue. There's going to be lobbying. Obviously, NAR came out today, and CAR, the California Association of Realtors, came out today and said they were kind of disappointed in doing that because, yes, it means more business. It means more family and home. So there's good things. There's profitability involved with it. There's more business for agents and more business for mortgage companies like ours. And yes, it's a good thing to get more people in houses. However, I think we need to do it the right way. We need to look at what happened to get us into the meltdown. It was a combination of factors. Yes, there was a lot of greed. Yes, there was a lot of lenders that weren't doing the right thing, but it also has to do with the consumers and not having a long-term outlook on their financial stability. So I think we just need to look at it and be cautious. And I think they'll end up doing it because of lobbying, especially if the housing isn't as strong as it is in Q1 or Q2, then, the administration doesn't want to look like that they're making housing harder. So then there's going to be that political piece and lobbying efforts that will, maybe make that cut go, who knows? But at the same time, I don't think it's a bad thing to look at that. Honestly, we just came from, we have short-term memories, right? So we just came from a bad meltdown. So, it could be something that works. It could be something that's not. If they truly are solvent and they're comfortable with those calculations, then hey, let's do it. But at the same time, let's not spread a false narrative out there, and let's really just look at the facts.
Well, and you and I talked offline, and yes, I'm a realtor and I want more business. More business means more money for my family. And of course, as a competitive person, I always want that. However, housing affects everything. It affects everything in all the businesses. And, lots of people lost their jobs back when the Big Short happened. And I just don't want more business at the expense of other people or at the expense of myself down the road when, let's say, my husband would lose his job because he's in finance and that affects it. So I think people need to understand that yes, as a realtor and as a mortgage person yourself, we want a healthy housing market. We need to do it responsibly. You touched on something. I think I said this to you before. Americans are great at making their same mistakes over and over again, and I'm hoping that we learn from it. So personally, I don't care if it was Trump, I don't care if it was Obama, I don't care if it was Bush, whoever we ever had. I don't care that they pulled it back or that they took it away. I only care that they're looking at it responsibly, and then once they look at it, say yes, move forward, or no, let's hold off on that. Now, I want to say one more thing before we close out. You wrote a fantastic article on this, and it's received a lot of shares. From what I heard, over 200, and I think it's climbing. So can you tell people where, one, they can connect with you, and two, where they can find your article to read up on this MIP being rolled back?
Sure. It's you could reach me pretty much. My hub is my website, which is www.realestatecio.com/blog is where you could find all my blog posts. It's my featured blog post right now on there, and it's about and you'll see the headline about Trump raising mortgage prices. It's kind of like, that's the visual I wanted out there. But you go to my website, you can connect with me, send me messages, connect with me on Snapchat, Instagram, Facebook, LinkedIn, wherever. And then you could read the blog post, and I'd appreciate, if it speaks to you, share it out. Dustin has sent me a link to talked to me about the social share site. I looked at the URL, and it's actually been shared before I took my flight, but it was like 250 times.
Wow.
That has been shared. I've had close to, and I have to check again, but before my flight, it was over 8,000 views.
Wow.
So it's actually taken off quite a bit, and which I think it speaks to the nature of not just, because it's the hot trending, it was like one of the first things that he signed after becoming president. But I think it also is that narrative of him, raising prices, that he's not a populist president. And again, that's not what the article's about. It's not whether Trump was bad, Obama was good, or vice versa, or whatever. It's not about any of that. It's about taking a logical look that most people need to stop reading headlines and then moving on. Most people need to, or not most, but all people need to look at the headlines, but then, dig deeper and actually read it, and then talk to people like yourself and Dustin and other people that are in the industry and ask their opinion. Adam Kresh, who we both know, did a live video on his page today about the MIP and what that meant. And I talked to him a little bit on Snapchat about that. So, there's a lot of professionals out there that don't care. They don't care about politics. They just care about getting the facts out there, because in the end, it's, we don't want that false narrative, because it doesn't do anyone any good. And I don't care if you like Trump or not, or liked Obama or not. It's just about looking at what got us into the mess and what we're doing now and what things we could do to avoid that. And we cannot have a short memory, because, the downturn, it sucked for a lot of people, and a lot of people lost their jobs. Forget real estate or mortgage. A lot of people just lost their jobs because of it, because of the trickle down effect of the housing market. It's what holds us up as an economy. So, we just need to be smart about these things, and at the same time, not be fear mongering and just sharing headlines because, bigger brands or news outlets are just throwing it out there to get clicks.
Okay. And so we're just going to end with this. Just to clarify, if you have a mortgage before 1/27/17, your mortgage is not going up, correct?
Correct. So what that had nothing to do with mortgages prior to 1/27/17, and now it doesn't even matter because it's suspended. So everything stays the same. That's all you need to understand, is that if whatever you're paying your mortgage before is what you're going to be, whatever you agreed to and whatever you were happy with, that's how it's going to continue. Nothing has changed. Nothing is getting rolled back. And even if this went through, it still wouldn't have changed unless you were doing stuff on or after the 27th. So that's what people need to know. And hey, if you want that cut to go through, then what you do is you call or email your representative and have them do what Congress is meant to do.
That's awesome. Jason, thank you again. I really appreciate this.
Thank you, Shannon. I love talking to you, and I hope to do it again soon.